Hello friends, in our last video we had tried to share our view that somehow 17,000 may act as a strong support, and accordingly we can see that today's low was near to 17,050 near about, and from that level we had seen a good bounce towards the close more than 200 points, and somehow bulls managed to give a close near to the day's high. Though day's high was made in the early opening ticks, but somehow recovery from the lower levels gives a good convinced move by the bulls, which suggests that we may see good upside in coming trading sessions. Now, before we do anything further, let us try to understand overall structure again on a daily chart. On a daily chart, we can see that somewhat structure on a rising channel is compromised because somehow bulls failed to continue the momentum from a higher level after our budget trading day, and from then we are watching red candles only. In fact, today's candle only is giving some conviction or some satisfaction that bulls are still into the market and we may see upside moves soon. If we check our Fibonacci ratios, then as per that we can see that up move or today's low happened from near to our Fibonacci ratio. Fibonacci ratio here is 76.4, which we need to add it, and accordingly we can see that a bounce was from near to 17,062 or near about levels, which is near to our trend line and Fibonacci ratio. So overall we cannot say still that a trend is reversed or 100% swing is possible, but still if we see overall basis, then a bounce from a lower levels gives some conviction that up move cannot be ruled out. If we apply Bollinger Band, then still lower Bollinger Band is bit far, so one should not be overconfident about the bounce. If we apply RSI, then RSI is about to give some bounce back, and practically looking at the current territory of RSI, this oscillator may not give us a true and fair picture, so we should not consider it. If we see hourly chart, then on hourly chart we can see that due to the bounce from a lower levels we are able to see a crossover between RSI and RSI average, but overall if we see that a Bollinger Band is having a downside tick momentum, and accordingly middle Bollinger Band, which is nothing else but a 20 SMA, may act as a strong resistance. 20 SMA at present, if we see, is at near to 17,320 or near about levels. So if at all a positional long needs to be made or created or position needs to be taken, then for that level we should keep our eye on 17,320 and 17,350 on a hourly close. If we check 15 minutes time frame, then we can see that overall structure may take some reversal move like this, but for that first of all bulls need to clear our intraday high, or you can say that this structure is a kind of inverted head and shoulder pattern, and bulls need to clear our neckline, which is near to 17,350 or near about level. In fact, we are going conservative, the reason being fake bounces or unnecessary bounces may happen. Likewise, what we have seen in the first opening ticks today. RSI is at near to overbought zone, so one should be a bit cautious about that. Overall structure may turn bullish if at all bulls are able to clear 17,300 to 350 near about levels. Now if we check option chain data, then on option chain 17,500 is having a highest OI, which should be ignored as a whole, and 17,000 should be focused as a highest OI on a PE front. So we can say that 17,000 may act as a strong support going forward for next two trading session. If at all bears manage to sustain spot nifty below 17,000 mark, then a change in OI and volume and price action needs to be checked at a serious note at that point of a time. Now if we see 17,500 is having a highest OI, which may act as a resistance going forward, but before that we should keep our eye on max pain. Max pain is at 17,300. Today's high is near to 17,300. In fact, if we consider any inverted head and shoulder pattern breakout, then it is at 17,300 to 17,350 zone on a 15 minutes time frame. Even if we compare 1 hour chart, then again level comes near to 17,350 near about levels. So overall 17,350 may act as a strong hurdle, and if any move or if bulls manage to sustain about this level, we can see something like short covering. At present, if we consider OI based PCR, it is not going to give us any true picture because it is at a 0.54 level, which may not give us a true and fair picture. Only the good part about volume based PCR is that it is at 0.94, which means somewhat PE writing was seen at a lower levels, and towards the close positions were carry forward for the next trading session. In the simple term, if we talk about a next trading session level that needs to be taken care about is 17,320 to 17,350. If at all bulls manage to sustain above that, we can see some short covering, and at that point of a time fast and furious up move cannot be ruled out. Chances of that is not very high, but it is also not impossible in the market. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.